Making money in the stock market is all about finding good stocks, buying good stocks, and then keeping good stocks. Today, I pull out the old crystal ball of research to see if I found another great stock for this channel. You are going to hear numbers today like 29% growth in free cash flow, 637% growth in net income. Today, I am talking about Payfare, make every day payday. So in this video, I'm going to teach you a little bit about what they do, who they are. We're going to look at the numbers, and then finally, I am going to give my opinion on this great Canadian stock. You are watching Common Sense Investing. My name is Cameron. Let's find a great penny stock. Payfare is a global fintech company offering digital banking, instant payment, and loyalty reward solutions for today's gig economy workforce. You could see some of their major partners and contracts here: Lyft, DoorDash, Uber Eats. We have all heard of these companies. Payfare supports the gig economy. What is the gig economy? It's a collection of independent contractors and freelance workers offering their goods or services to consumers and businesses for a price on gig platforms. So pay-to-use type platforms like ride shares for Uber, Lyft, food delivery services, those are gig workers. Now, right now, they're saying that the gig economy accounts for nearly 39% of the US workforce, and that is growing at 17.4% compounded annual growth rate. So the opportunity here has already been large in the past. This is already kind of a huge sector, as well as it's still growing pretty quickly as we move forward. Payfare is saying they're powering the gig economy, and some great examples here of people who would use their services: trucking, trades and construction, rideshare, retail and logistics, healthcare, home services, freelancers, delivery, creators, hospitality. A growing number of workers are needing an app like Payfare. And important to the success of this platform, please go check out some of the reviews, because ultimately that is their customers. As important as Uber is a large contract to this company, the people that are actually using their platforms, using their services, make a difference as to whether they get contracts or not. So if people are liking Payfare, shareholders might like Payfare. And Payfare, to take advantage of this opportunity and become the best fintech earn wage access solution on the market, is by providing instant or near instant access to gig worker earnings. So in traditional banking systems, or if you're working for somebody, you might perform a service and you might not get paid for that service for 2 days, 2 weeks, once a month, whatever it is. A lot of these people might need that money sooner. By using Payfare, you perform a service, they pay Payfare, Payfare takes their cut, and they pay you instantly. So you perform a service, you get that money right away. That's a huge competitive advantage. But to see if it's working, of course, we always go to the numbers because the fins don't lie. Let's go look at their 3 and 9 months ended September 30th, 2023. Substantial growth, with revenue up 35% year over year, gross dollar volume GDV up 40% year over year, recurring revenue, 70 to 80% of their revenue is from network interchange fees such as ATM withdrawals. This company is growing very quickly. In fact, their Q3 highlights here are just stunning. Record gross profit up 77% year over year. Net income 10 cents per share, up 684% year over year. Adjusted net income up 337% year over year. Free cash flow of $3.6 million, up 29% year over year. So free cash flow is up 29%. Their share price was up 20% on the year. This company, we need to go look at some more numbers, including guidance and future potential, because they've already issued 2023 revenue and adjusted EBITDA guidance. They say that they remain on track to meet its full year guidance. In Q4, they expect $50 million of revenue, $7 million of adjusted EBITDA. So this is going to be very good. They still have more growth coming that we'll talk about, several significant new white label partnerships, as well as the rollout of Paid App by Payfare continues to present meaningful growth opportunities. They've already had 35% revenue growth year over year, and they're saying that this can continue. And I need you to keep researching this company because there's so much going on, so many good things to look at. Here is just some of the things that they're talking about for growth into the future. Too much to talk about in a quick introductory video, but one of those things is potentially expanding not only into the gig economy further, but outside of the gig economy, where they're talking about building payroll and time attendance integrations for regular employers and becoming a regular fintech in and out of gig. But really, the huge opportunity here with Payfare might be the turnaround story that people haven't really noticed yet. Just looking at their net income per share, we go back here to 2021, they were losing 10 cents per share, 6 cents per share, 5 cents per share, 2 cents per share. So still losing money, but you could see that turnaround. All of a sudden, you hit 2023, they're getting here 10 cents per share in net income. So they went from negative 10 cents per share in 2021 to positive 10 cents per share in 2023. And share price hasn't really reflected that, in my opinion. And if you weren't interested yet, cash of $56 million and growing, growth objectives fully funded, so no major dilution needed, and no debt. So just pretending I'm going back to Q3 and giving their earnings a 5-star rating, 0 being really bad, 5 being incredible. What do I give Payfare's Q3 2023 earnings? 4 stars and potentially improving, right? They have cash, fantastic turnaround story. There's potentially more growth in the future. The risks that we're going to be talking about here, large contracts, if they lose one of these large contracts, it could definitely affect them negatively. There is some competition. This is a growth boom or bust company stock. There is some risk here, and share price. While the valuations in their growth and sales look absolutely stunning, telling me that this company might be undervalued, the metrics in their price to earnings, price to EBITDA are potentially a little bit too high. So which one is it? I really like their share structure, 47.8 million shares outstanding, 36 million float, 7% insider ownership, 23% held by institutions, revenue and growth. 3.5 million options outstanding, 1.1 million warrants. So this company could see up to 10% dilution based on warrants and options, but they don't need dilution to grow the company. And I have to ask the question, are investors overlooking their Q4 guidance? Because one of the things we were looking at is their valuation for price to earnings seems a little bit high. However, they're saying in the past 9 months, they had $14 million of profitable EBITDA. And in Q4 alone, they expect $7 million in profitable EBITDA. That seems like a large growth in Q4. But okay, stop. I need to start talking about the risks and rewards of Payfare Inc., my opinion. Now, before I do not forget that none of this is financial advice. This channel is built to have conversations about good stocks. As an average retail investor, I could be very wrong. This is an introduction to Payfare. I need you to go do your own research and then come talk to me on some of my other platforms here. I have a free Discord that I will link down below in the comments where you could join us and continue talking about Payfare and some other fantastic stocks, as well as I have a paid Patreon where we actually found Payfare and have been researching this company for the past week. So a couple great places to find common sense investing and continue talking about the rewards and the risk of Payfare. It's a really nice stock to look at online. When you pull out some software here, analysts like the stock, good financial health, great management, great growth, great profitability. When you look at the valuation metrics, very, very attractive company. The only struggles here with valuation are, again, P/E, price to forward cash flow. I found this fantastic article, Picks and Shovels Play on the Gig Economy. The author gives Payfare a glowing review with an A- rating, saying that despite a significantly improved business and fundamentals that continue to grow at a strong double-digit clip, Payfare trades only 20% above its IPO price with attractive looking valuations and its leading position as a picks and shovels play on a growing gig industry. Payfare may offer significant multi-bagger potential for investors. I will link to that article down below in the pinned comment because it also talks about their competition, which Payfare is talking about here. So if you're worried about competition in the space, they provide you all this data and all these other companies to go research. Active user growth, which is the foundation driving revenue and net income growth for this company, up 32% year over year. One of the concerns for me, of course, you could see it slowing a little bit as this company gets larger. Will their growth slow down? And that's the risk of Payfare for me. Is their growth going to slow down? As they get larger, are they going to have more difficulties in growing? Are they going to hit up against some other competition? Are they going to lose a big contract? Can they continue their growth, which has been accelerating impressively, including their net income? And the reward is plentiful here. I mean, let's be honest. If their 2024 numbers are as impressive as their 2023 numbers, like as that improvement from 2022 to 2023 was stunning. If that can continue into the next year, This company is just, I mean, it's nice to look at. Let's be honest here, right? $56 million in cash, no debt, 35% growth, share price only up 20%. There's a lot to like here. And then the potential that they can expand past the gig economy. Even if you're a little bit unsure about the gig economy and where it goes and how much competition there is in this space, if Payfare can even get beyond that, I mean, the sky is the limit here. In saying that, the gig economy, it's impressive in itself, right? So it's not needed. I've learned a lot about the gig economy in making this video. I hope you learned a lot about Payfare. Thank you for your time. I really appreciate it. You've been watching Common Sense Investing. I hope to see you again soon.